Wow, what a week of crypto news. Ethereum creator Vitalik Buterin's Twitter gets hacked. FTX is suing LayerZero, which could be glorious or catastrophic for the airdrop. Avalanche has built something incredible, as well as much more crazy crypto news to cover this week. I've been away on holiday for a couple weeks, so welcome back again. It's good to be back. I'm Theo, a content creator for the Alt Crypto Talk team, and remember, nothing in this video is financial advice, purely my own opinion and based on my own research. Do not invest in anything you can't afford to lose, and be sure to smash that like and subscribe button and leave a comment if you have any questions whatsoever, and be sure to follow us on Twitter at AltCryptoGems for daily crypto content, and check out our website for frequent guides, project reviews, articles, and everything crypto related. Okay guys, let's jump straight into the video. So let's start off with the first article on G20 and the crypto regulatory framework. So here, as you can see, it says, as G20 plans crypto regulatory framework, India may shelve plan for outright ban. Now, this is absolutely huge, so it's very important we read through this article. So with the G20 countries agreeing to explore a coordinated regulatory framework for crypto assets, India could wait a while longer before firming up its domestic regulations for cryptocurrencies and initiate a dialogue with stakeholders on the way forward. An outright ban on cryptocurrencies that was mooted by the Reserve Bank of India and under consideration by the government is likely off the cards, a senior government official indicated on Sunday. Earlier, India was contemplating a ban on it. A lot of conversation happened. In late 2021, there was a lot of interest in cryptocurrencies, a lot of people were buying it, and even advertisements were coming in IPL matches, which we felt was not on the official record. Now, he went on to say, when we went deeper into regulating it, we realized one country alone cannot do it. Unless we get into monitoring and controlling every device on the internet, which is not the kind of regulation we want in India. So whatever we do, all along this thought has been there to build a global consensus, the official explained. The G20 leaders declaration has endorsed the Financial Stability Board (FSB) recommendations to regulate and supervise crypto assets activities. It welcomed a synthesis paper from the International Monetary Fund, also known as IMF, and the FSB, which includes a roadmap for a coordinated regulatory framework that factors in risks, including those specific to emerging markets and pertaining to money laundering and terror financing. Now, the G20 finance ministers and central bank governors will discuss taking forward this roadmap at a meeting in Marrakesh next month, and the timely implementation is key. So the purpose is that the risks are well managed. Any country can allow higher risks if they want or ban it if they like, but whatever one does, it should not go below a certain level of regulation. Otherwise it will lead to shifting of the trade to other jurisdictions. Each of the recommendations of the paper has to be assimilated. We have to think through what it means vis-a-vis our economy and financial system. It has been taken up not just by the G20 countries, but others as well. If one country says we will have a very relaxed approach towards it, it will defeat the entire purpose, he said. Based on this, we need to have a conversation based on our system with our stakeholders on how we will see the policy recommendations, the roadmap, and what is our final view. IMF Managing Director Kristalina Georgieva said on Sunday that more work lies ahead in the realm of digital money and crypto assets. To this end, the G20 has tasked relevant institutions to improve regulation and supervision of crypto assets. The IMF is contributing to proposals for a comprehensive policy framework and advance the debate on how central bank digital currencies could impact the global economy and financial system, she said. So it's very clear that CBDCs are coming forward. The G20 is going to implement this 100 million% in my opinion. There's no way they're going to completely ban crypto, but they definitely want to regulate it, and in my opinion, CBDCs is the best way they're going to do that. Honestly, CBDCs, I'm not too keen on them. They obviously defeat the purpose of decentralization. However, we all know it's inevitable, and CBDCs will be the entrance and gateway to cryptocurrencies. Now, moving on to a huge article from Cointelegraph, which has been all over Twitter and all over the crypto internet. FTX is suing LayerZero Labs, which is seeking to recover over $21 million, which was moved prior to the bankruptcy of the exchange. Now, FTX is seeking the cancellation of agreements made days before its collapse, as well as the returns of millions of transfers to LayerZero Labs and its affiliates. Now, what does this mean exactly? Well, bankrupt crypto exchange FTX has filed a lawsuit against cross-chain protocol LayerZero Labs, which is doing an airdrop, or is not doing an airdrop now by the way, and is seeking to recover $21 million in funds that were allegedly illegally withdrawn prior to FTX's shutdown in November. The case traces back to transactions made from January to May 2022 between Alameda Ventures, the venture capital arm of Alameda Research, FTX's sister company, and LayerZero. According to court documents filed in September, to be precise on the 9th, Alameda Ventures paid more than $70 million in 2 transactions to acquire a stake of roughly 4.92% in LayerZero. Also in March, Alameda Ventures paid another $25 million for 100 million STG tokens at a public auction to be distributed over a period of 6 months beginning in March 2023. So this is the last month of that distribution. So it's all coming under the light now, and let's see what SBF says himself. And this is what SBF said himself in March of 2022. Super excited to work with LayerZero. They're building out a key missing piece of crypto infrastructure, cross-chain liquidity, and more importantly, they're doing a great job of building great products, which is actually true, but we all hate SBF. Now, amid these transactions in February, LayerZero loaned $45 million to Alameda Ventures parent Alameda Research under a promissory note bearing an annual interest rate of 8%. When FTX's crisis unfolded in early November, LayerZero sought a deal for the return of its stake owned by Alameda. The agreement included the return of shares to LayerZero in exchange for the forgiveness of the $45 million loan. Another deal related to 100 million STG tokens, which is from Stargate Finance, was also reached, which LayerZero purchased back at a discount for $10 million on November 9th. This transaction, however, was not completed. LayerZero did not pay for the tokens, and Alameda Ventures did not transfer the tokens. Put simply, we did indeed buy all the tokens back. Better is better. So you can see this article here, update from LayerZero Labs front. Having been here for a long time, this is not the first time I've seen an exchange blow up. Mt. Gox, Cryptsy, Mint Power, Bitfinex, Quadriga, and the list goes on and on. This one definitely hits differently though. I think because we've evolved tremendously over the past decade, and FTX and SAM stood at the center of what everybody seemed to be coalescing around as the future of the industry. I want to talk about a few things around LayerZero, both now and in the future. To start, we knew that being extremely well capitalized during a period like this would present some unique opportunities, and these last few days certainly have. We've worked around the clock for the past 72 hours to structure an agreement and have bought FTX Ventures Alameda out of 100% of their equity position, token warrants, and any and all agreements between us. Separately, we've also purchased the locked STG tokens from the community auction that Alameda had, and will be putting up a proposal to transfer these to the Stargate Foundation pari passu and let the community decide what to do with them. We currently have $107 million in direct cash balance, 27 million in on-chain funds, 90% in stablecoins, for a total of $134 million. We do have an additional 11.5 that was on FTX that was used operationally, but for the sake of sanity, we'll treat this as zero for the moment, although presumably some amount on the dollar is likely recoverable. This puts us in an incredibly strong position going into the next few years. We have no less than 7 years of runway even in our aggressive projections, are equity rich, and have one of the most amazing teams in all of crypto. Competitors are cash strapped, scared, and questioning all of the future of the industry while we make the same bet we've always made. Throughout all of the fund blow-ups, dog coins, overledged apes, and Ponzi's, the underlying technology has never ceased to amaze us, and we're all as obsessed as we have ever been with the core mission. You've seen a lot from us in the past 6 months, but I promise you the next 12 will bring an order of magnitude more. I'm here to answer any questions you have, otherwise we'll be heads down building the fabric of all on-chain digital transactions, ready for the market turn and positioning ourselves to capture everything when it does. I'll write a formal investor letter closer to the new year with asks and a proper progress update, which is long overdue. For now, I'll leave you some measures of progress below and look forward to continuing this journey with all of you. So you can read this whole article, which was written by Brian Pellegrino from LayerZero Labs. However, carrying on, FTX alleges in the lawsuit that LayerZero exploited Alameda Ventures during a liquidity crisis. Here's what he said. LayerZero was well aware that Alameda Research was facing a liquidity crisis, and within about 24 hours negotiated a fire sale transaction with Caroline Ellison, Alameda's Research's then CEO. In addition to cancellation of the agreement, the complaint seeks recovery of funds withdrawn days before FTX bankruptcy filing, including approximately $21.37 million from LayerZero Labs, as well as $13.07 million from Ari Litton, its former chief operating officer, and $6.65 million from a subsidiary, Skip and Goose. LayerZero Labs isn't the first company to be sued by FTX. The bankrupt company is also attempting to recoup billions in funds from transactions made by a number of subsidiaries before the collapse of its conglomerate. Cointelegraph reached out to LayerZero Labs but did not receive a response at the time of publication. The lawsuit is not related to LayerZero Power Systems, a company that owns the LayerZero trademark and does not operate in the crypto industry. So this one's going to be huge, it's going to be ongoing, so it's something that we'll have to keep an eye on. Whether or not it affects the airdrop is to be discovered as well. Who knows, they could announce the airdrop very soon to get some funds in, or they might be doing a token sell, which I think would be the wrong move. However, let's see what they do, but let's move on to the next article. Now, this is going to be on Ripple buying crypto infrastructure startup in its second acquisition of 2023. So, cryptocurrency company Ripple announced on Friday it will acquire Fortress Trust, a startup specializing in crypto infrastructure, giving it a license in Nevada and allowing it to expand beyond its core bread and butter of blockchain-enabled payments. Ripple did not disclose the terms of the deal. Founded in 2021 by Scott Purcell, an entrepreneur with a background in equity and debt crowdfunding, Fortress Trust aims to help large enterprises interact with digital currencies. Purcell was formerly CEO of Prime Trust, a crypto custodian which shut down after BitGo abandoned a deal to acquire this firm. Ripple is mostly known for its role as a cross-border payments firm. The company uses a blockchain-based messaging system akin to Swift to approve speedy transactions between a network of banks and other financial institutions. Ripple's partners include Britain's Modular, Singapore's Neum, and Japan's SBI Remit. The company also uses XRP, a cryptocurrency it owns a significant portion of and has become closely associated with for cross-border payments between banks and other financial institutions. XRP didn't move substantially on the news. The token was up about 0.4% in the past 24 hours, trading at a price of 50 cents. Ripple has struggled in recent years with the US SEC commission targeting the firm with a lawsuit alleging XRP should be considered a security and that its executives sold over $1 billion worth of the token to investors in an illegal securities offering. So we all know about what's happening with the XRP case. However, Fortress is Ripple's second acquisition this year. In May, the company agreed to buy Metaco, which is a Swiss provider of crypto custody services, for $250 million. A Ripple spokesperson declined to comment on the size of the deal, but said that it is less than the sum Ripple paid to buy Metaco. Ripple was a minority investor in Fortress's Trust seed funding round. Ripple said the deal would support our existing lines of business, specifically in terms of improving the customer experience within our payments and liquidity solutions. So, Ripple is one of the many players in the so-called crypto custody space, meaning it's focused on helping companies and individual users to store tokens in a secure, decentralized address without requiring all the technical know-how. Fortress Trust uses application programming interfaces, also known as APIs, programs that allow different apps to interact with each other to allow companies to pull data from other bits of software, such as wallets holding cryptocurrencies and NFTs. Per Fortress's website, the startup worked with crypto exchanges, NFT marketplaces, tokenization platforms, corporate brands, agencies, securities exchanges, real estate, healthcare, neobanks, sports and entertainment celebrities, musicians, influencers, and other innovators. So this is going to be a big investment for Ripple. Ripple seems to be preparing themselves for the next bull run, which is going to be huge. So keep this in mind and get ready for the bull run. Let's move on to the next article, which is going to be huge, and that is that the hacker steals over $690,000 after hijacking Vitalik Buterin's Twitter account. So you may have seen this and heard of this already, and hopefully you weren't affected by this, guys, because this is absolutely horrible. Vitalik Buterin appeared to have fallen victim to a hacker on Twitter who went on to steal $691,000 from users who followed a corrupted link posted to his feed. The hack was first noticed on Saturday when a post appeared on Buterin's post announcing the launch of a set of commemorative NFTs from software provider Consensus. This malicious link, which could have been shown to many of his 4.9 million followers, prompted victims to connect their wallets to mint the NFT, but in reality it simply created a vacuum for the hacker to make off with their funds. On crypto Twitter, users were quick to raise the alarm about the fake link, but the first apparent acknowledgement that Buterin was hacked came from his father, Dmitry Dima Buterin. Disregard this post. Apparently Vitalik has been hacked. He is working on restoring access. The post has since been deleted, but the damage was done. A number of victims reported losing access to funds of their wallets. Within the hour, the hacker appeared to make off with more than $147,000, but that quickly increased to $691K, according to blockchain investigator Zach XBT, which is an absolute legend. In the days since the hack was first reported, Buterin has not yet commented publicly on the incident, his most recent post again being a retweet of a September 6th post. Zach ZPT reported that the hacker subsequently sent a stolen NFT to Buterin. The hacker just sent Vitalik this NFT they drained, which is absolutely nuts. You can see it here, which Zach XBT posted on his account. It is unknown just how many users were affected, but this latest incident adds to a growing list of hacks over social media that have netted millions in tokens. After so many losses, there have been a debate on how victims should be compensated for their losses by developers themselves. Twitter's own security also came into question, including by Binance CEO Changpeng Zhao, who wrote that the platform account security is not designed well compared to traditional financial accounts. It needs quite a bit more features. 2FA login ID should be different from handle or email, etc., wrote Zhao, referring to two-factor authentication. In the past, I have had my Twitter account locked a few times due to hackers trying to brute force it, trying different passwords repeatedly. This was before the Elon era. 2FA is a widely recommended defense method for users to require two sets of information to verify their identity before accessing an account. It is supported by Twitter, but only for users who pay for Twitter Blue. Brute forcing is a tactic where hackers bombard an account with access requests until one eventually breaks through. So guys, Twitter is obviously not a safe space. You can obviously see so many tags and so many links that are malicious, and I hope you don't click on them. Whenever you see someone post a crazy link that could be harmful, just give it a few hours and see if anything comes up, like a tweet saying that it is a malicious link. Now guys, I'm sorry if you were affected by this. This is absolutely horrible, and I do hope Vitalik Buterin compensates you all. But let's move on to the last and final article, which is absolutely huge, and that is Avalanche's Hyper SDK blockchain upgrade hits 143,000 transactions per second on the testnet. So as we all knew, Avalanche would be upgrading their network due to the competition of Binance, Polygon, and all these others that are focusing on layer 2 technology. So smart contract layer 1 blockchain network Avalanche's testnet has reportedly hit over 140,000 transactions per second during testnet of its Hyper SDK blockchain upgrade. Avalanche is currently testing a framework for building high-performance virtual machines from scratch on the network. According to Ava Labs, Hyper SDK is structured so that developers can plug into a lightning-fast execution environment without writing massive amounts of code from scratch. This enables the simplification and acceleration of custom VM development, making it easier for developers to launch optimized blockchains. Hyper SDK reached a whopping 143,000 transactions per second in a controlled testing environment, according to a screenshot shared on GitHub. In a comparison, Avalanche claims to currently process up to 4,500 transactions per second, Solana claims between 2 to 3,000, and Ethereum does just 15 to 20 according to data from CoinCodex. So clearly Avalanche is the top winner, and in my opinion is underpriced. Speaking to Cointelegraph's Andrew Fenton at the Korea Blockchain Week 2023, the head of product at Ava Labs, Nick Musalem, said he expects real-world throughput to eventually settle around 50,000 transactions per second. They've clocked at it at 141k, but that's in a very controlled environment, so I think if you were to cut that in half, it would still be very generous and probably will do more than that. Referring to the blockchain trilemma, which is the delicate balance between decentralization, scalability, and security, he said nothing was sacrificed, adding that Avalanche developers wrote it from scratch to better handle state management. Basically took out a lot of the stuff that was in the EVM, aka the Ethereum virtual machine, that they felt was unnecessary on the networking layer or at the storage layer, and then put our consensus algorithm underneath it, and it just goes fast. Now it's optimized. Blockchains built with Hyper SDK will operate as subnets called hyperchains and can be adapted for any function the developer wishes. There will be a user interface that doesn't require additional coding, and developers will also have a choice of VM. You can literally launch it in 5 minutes, said Musalem. Musalem said Hyper SDK wasn't open source and available right now, but it's very much in the early beta stages. It hasn't been launched and is not production ready yet, as the target for that is by the end of the year, he added. So they'll be ready before the bull run, and Avalanche, in my opinion, will be an absolute key player. I'm extremely bullish on Avalanche, and these prices are absolutely cheap. So if we go over to coinmarketcap.com, scroll down and I show you Avalanche, you'll see that it is under $10 at a price of $9.46 with a market cap of $3.3 billion. Avalanche has seen an all-time high of roughly $140, which is roughly 14x away from its previous all-time high. And honestly guys, I really do believe it's going to achieve it once again and possibly exceed it. Now, billions and trillions are going to flood into the market, and Avalanche, in my opinion, is going to take a huge chunk of that. So overall, we don't seem to be dropping below the $1 trillion market cap still. I'm very surprised. I would have thought that we'd been dipped by now. However, it looks like we are still heading in that direction. What I must say is that the Ethereum GUI is extremely cheap, so if you want to do any transactions on the Ethereum network, now is the time. Anything under 10 GUI is absolutely fantastic. Still expensive in comparison to other beautiful networks. However, sometimes we need to use the Ethereum network. But guys, that's pretty much it for this video. I must mention that the fear and greed index is crazy right now. We're sitting at 35 out of 100, which is extreme fear. But that is also great news because that allows us to buy at cheaper prices. If you have any questions whatsoever, you can hit me up on Twitter at HiCryptoGuy. Don't forget to follow Jules on Twitter at AltCryptoGems for the best crypto content. And also, if you want that trading information and knowledge, head over to AltCryptoTalk on Twitter, Discord, and all other socials. But make sure you don't click on any dodgy links. Follow the official links through our website. Use YouTube page or Alt Crypto Gems or Alt Crypto Talk Twitter pages. So guys, thank you very much again. I love you all and I'll see you in the next video. And we also have a promotion running on Bybit, the best centralized exchange platform for buying, trading and earning. Bybit is home to all your favorite cryptocurrencies and you can claim up to $4,380 just by signing up using the link in the description below. It's simple. If you need help finding the right crypto gems, then follow us on Twitter at AltCryptoGems and head over to our website to get your hands on detailed project reviews, crypto guides and more. Thank you very much for watching and we hope you found this video helpful and informative. Until next time, DGens.